Hey everybody, what's going on? So in today's video, we're going to be covering a couple more earnings that we've got coming up this week, although, earnings season is slowing right down. We've got a big week for inflation reports with CPI and PPI, consumer confidence. Obviously, we have to talk about the banking crisis, so we'll get into that a little bit. I'll try and summarize what's been going on, but it's all very dynamic still, so... and we'll look at, and then of course we'll look at the markets. We'll look at how some of our setups have been hanging in there, but don't have any new setups. I think that at least at the beginning of the week, because this banking thing is so dynamic, I think sitting on your hands is probably the best bet. There are short setups out there, and maybe they'll work, and there are long setups out there, and maybe those will work too, but... it's going to be volatile, and things are going to change quickly. So that's why I think for most of us, sitting on your hands is the best bet. But we'll go into that a little more later. All right. By the way, make sure to smash that like button. We put a lot of work in these videos, and it really helps us out. And if you're wondering who I am, my name is Kevin D. I'm here to help make sense of all of this for you. Let's go here. All right, so if you're wondering why we do this, we make these videos every week to keep our members up to date on what's going on in the markets and to highlight fresh opportunities. We have a really cool community of like-minded traders, and members get to take advantage of our live streams and live mentor sessions. So check out the link down below in the description and come join us on Discord. We'd love to have you there. Okay, here's a quick disclaimer. Everything we do here is for educational purposes only. We are not investment advisors, do not provide investment advice. All trading investment decisions are your own and done at your own risk. All right, let's do this. So let's start by looking at some earnings. Tomorrow morning, on Monday morning, Zim, a shipping company, interesting shipping company, is reporting before the open, and Lightning Motors could also be interesting as well. Although both of those, could be affected a lot more by what's going on in the market than by their own earnings. After the close on Monday, the only one I think that could be interesting is Big Bear AI, and I think the only reason it is interesting is because it's got AI in its name. Coming up on Tuesday after the close, we have Stoneco, the payment processor. That one could be interesting, and Lennar, one of the home builders. That I think will definitely be interesting. Coming up on Wednesday after the close, probably the biggest one of the week, or one of the biggest ones, Adobe. Big name there, obviously. Thursday before the open, we have Dollar General. That should be interesting. On Thursday after the close, we have FedEx. Also on Thursday after the close, we have Playboy. And I know we've got, unfortunately, a lot of bag holders. We'll be looking to see how that does. On Friday before the open, we've got XPeng and Ballard Power as well. All right, so coming up on the macro front this week, on Monday, we have nothing except... I'm sure we're going to have plenty of news flow we're actually expecting some news flow today. I'll get into this in a sec. We're expecting some news today on this whole banking thing. But I'm sure there'll be lots more news flow on Monday about the banking thing. The Fed has a meeting. They call it an expedited meeting, kind of an extraordinary meeting. They are going to be talking about easing or opening up one of their short-term lending facilities to more banks. Because the banks go to the Fed, they borrow money at really cheap rates. So they're having a bit of a discussion about that on Monday, but they're also having discussions today, apparently, on some other stuff that we'll get into in a sec. All right, so on Tuesday, we have CPI, the Consumer Price Index, also known as inflation. That's a really big number. That's going to make Tuesday a volatile day, and that happens before the open on Tuesday. So, it's kind of the last thing we need, with everything else that's going on, the CPI. Unless, of course, the CPI comes in friendly. On Wednesday, we have the producer price index, which is also known as producer inflation. We also have retail sales reports on Wednesday. So again, these are really big numbers, really big reports. Market moving reports, and they will move the market. On Thursday, we have unemployment claims, and then on Friday, we have the University of Michigan consumer sentiment data and also inflation expectations data. So quite a week, really big week. Even without all this banking stuff, it's a big week. All right, so let's talk about banking a little bit. So no doubt you've heard about a bunch of this. You may not totally understand what's going on, and I'm going to try and really give you sort of a high-level overview of what's happening and why we should be concerned about it. But I linked in the Discord, I linked to a really good article that I read that covers this in great, really good detail and makes it really easy to understand as well. So that's linked in the Discord. Go have a look because I think you'll find it really helpful. All right, so this banking crisis basically started on Thursday morning, although if you look at the charts, you can see that there were hints of this going back earlier in the week, but it really started to come to a head on Thursday morning when Silvergate Capital, SI, they announced that they were winding down operations and were going to give all of their depositors their money back. So that was, that's a big deal if you owned SI. Basically, they're saying that, the company's closing. But it sounded like it was unlikely that anyone was going to lose any money out of that other than shareholders. So not so bad, right? But also sort of going on at the same time that morning, you could see Silicon Valley Bank, SIVB, was starting to slide, and you could see that KRE, the regional bank ETF, was starting to slide as well. And so that was interesting, but there was no big news yet, other than Silicon Valley Bank had tried to do a very large offering and pretty much failed at the offering. So that's why they were sliding. Well, more news came out later in the day about what's really going on there. And it turns out that they were underwater on a lot of their bond holdings. So what happens is, they had been aggressively buying 10-year bonds, with all their depositors' money, which is perfectly legal. You're allowed to do that. And then, that's maybe a regulatory issue that needs to be looked at. But they had been buying 10-year bonds aggressively. But unfortunately, they've been buying them at really low rates. Their average bond purchase was just under 1.5%. Well, 10-year bonds are now going for 4.5% or 5%, right? So they were kind of way underwater on these. And what happens with bonds is that interest gets extrapolated over the life of the bond. So if you're 3% underwater, the bond is actually worth 25% less if you have to liquidate it, if you go to sell it. If you hold it to maturity, that's fine. All that's happened is you've made less interest than you could have if you had a bond and paying at a higher rate. But if you need to liquidate it, if you need to sell it, you take a big hit on that bond. And that's exactly what was happening. They were having a bit of a run on, because they do business with a bunch of startups, and startups weren't getting any fresh capital in. The VCs have been holding back on their cash a little bit, not doing extra rounds with these startups. So startups were going through their savings, and they were hauling their savings out of this bank. This obviously Silicon Valley Bank, biggest bank for startups, and for also some large companies too. I mean, there are companies like Etsy having problems because Etsy had a lot of deposits there. We'll get into that in a sec. But I want to get back to this bond thing because that was really the cause of this. So they've got these bonds. It's a huge, turned out being about 50% of their reserves. And so when their deposits start drawing down, they have to start selling these bonds or finding other ways to come up with cash. So they basically became illiquid because their assets weren't enough to cover their potential drawdown from these deposits. Well, by Friday morning, everybody realized what's going on, and all these startups and other companies that had deposits with this bank wanted their money out and started hauling their money out. And by Friday morning, they had $40 billion worth of withdrawals to be processed. Now, they could have dealt with it if they had sold all these bonds at a huge loss. But that pretty much would have wiped them out. Well, the California regulators and the FDIC swooped in there and basically shut things down. They are going to be paying depositors, are insured up to $250,000. And there's still lots of money left over after that. So, the people who have deposits greater than $250,000 have received a certificate, and they will be paid out over the next week or two. But this causes a big problem for a lot of companies in Silicon Valley. And even bigger companies, like I said, Etsy. Etsy's got something like $250 million in there. Etsy can't pay out to their vendors, to the people who are using the service and selling products on their site. They can't pay out to them for the moment. A lot of companies are going to be having trouble paying out payroll. So you can see how this can kind of spiral out of control, even though at the moment most of this trouble is focused on, or it's within Silicon Valley Bank. It can expand in other ways to other companies, and it can expand into payrolls, and it can expand into the larger economy, and that's what gets a little scary. Now, they're not the only bank that have been aggressively buying bonds and speculating on bonds. Some of the other ones that are, people are looking at closely are FRC. It's First, I can't remember the name of it. It's First something or other from San Francisco. STT is another one in a similar situation. Bank of America is also really underwater on a lot of their bond holdings. Now, the Bank of America, it's a smaller percentage of their holdings than it is at SIVB. And, they're a much bigger bank, so they should be fine. So it's not, this doesn't look like it's going to expand out into the sort of general banking sector. It's not going to be a 2008 style crisis. But it is still pretty serious, and it is going to require some government intervention. If there is no government intervention here, this will spiral out of control and become a lot more serious. Now, the government has the ability right now, and they are apparently meeting today, and they have the ability to come in and backstop a lot of this money. And if they do that, if they say, yes, we will backstop this, and we'll backstop FRC, that will prevent a run on the banks. But right now, if you're a depositor at some of these smaller regional banks, and you see that your deposits could just evaporate because of the kind of investments these banks have made with your deposits, why would you stick with these small regional banks? Why wouldn't you go to one of the big four? Why wouldn't you put your money with JP Morgan or Morgan Stanley or Charles Schwab, or one of the really big banks that are very, very unlikely to go down? One of the banks that are, basically too big to fail. If the government doesn't do anything, I think there's a really good chance that we start seeing runs on small banks, at the beginning of the week. And I really fear that could spiral out of control. I don't think that's what's going to happen, but there is a chance that could happen. The government really needs to intervene. Now, I'm seeing news that the Fed and the FDIC are discussing methods of backstopping SVB. And doing that would put a whole lot of confidence into the system. And like I said, more confidence if they say, yes, we'll backstop other banks. that are in this situation. Now, I'm not suggesting that, and they're not suggesting that they're going to be backstopping shareholders. They're not going to be trying to save these banks from going bankrupt, and I don't think that they should do. I think as shareholders, I mean, we take risks, and the major shareholders in this bank, they've made serious mistakes. They were reckless. The directors of these, the directors and the insiders of this bank, they need to take a hit. They deserve to take a hit here. Individual shareholders like you and I mean, maybe not so much. And thankfully, I'm not a shareholder in SIVB or really any of these other banks. But the insiders and directors and the executives, of these companies, of these banks, when they make big mistakes like this, they deserve to take a hit. So I don't want to see them being backstopped, but I do want to see depositors being backstopped because that is good for the economy. So there you have it. That's hopefully that all made sense. That's kind of where we're at right now. Everything, like I said, very much in flux. Let me just refresh here and see if there's any news on this backstop business. And not really. No. So is there a Fed and the Treasury now weighing in on emergency authority for deposit backstop. There's definitely some stuff going on here over the weekend. Hopefully they come out with news before the pre-market opens, or actually really hopefully before the futures open in 15 minutes. That we get some solid news that something's going on. Otherwise, I think we'll see, futures going to continue to the downside here. And we'll look at our charts and everything in a few minutes. And when these futures do open, we'll go to a live chart. But there you go. We need some good news from the government to really save this from becoming a lot more serious. All right, let's move on now to take a look at the markets. So we'll look at our major indices, obviously. We'll look at international markets, important commodities. We'll look at our sectors. We'll look at some plays from last week. And like I said, there's no new setups, but we'll talk about, what you as a trader might want to do. If you're an investor, though, I think sitting on your hands is the thing to do. All right, let's bring up this daily chart of the S&P 500, and you can see a couple of really nasty red candles here over the last couple of days. Big red volume here. This is see this orange line here on the volume on the S&P 500. That's a really interesting spot. When red volume goes up above that line, we very often get a reversal to the upside. Not necessarily the next day, but quite often within a few days. And you can see there's a cluster of red volume here, right? All of this, was almost above that line. And then eventually we got to move to the upside. We had a red volume right here on this big red candle. Well, within 2 days, we started moving to the upside. Look at this one here. Big red volume on that. Right above that line, we start to move up to the upside. It didn't last very long. We came back down again. But you see what I'm getting at here? We see reversals and downtrends when we get volume above this level. And I think that level was 120 million shares on the S&P 500. So that's interesting. That's something that we can be hopeful about. Another thing we can be hopeful about is that we came down to the 786 retracement of that move up, and we bounced a little bit there intraday on Friday. Now, things that we don't like to see. Obviously, we've broken our uptrend. We did that on Thursday. We've broken that downtrend line, and that had been acting as support 1, 2, 3 times, and then failed on Friday. We've broken through and closed below the 200-day moving average, the 100-day moving average, and every other moving average. These are not good signs. So, a couple little reasons to be hopeful, but there's a lot here that's ugly. There's a lot here that says more downside to come. we do have, we've got this cluster of activity here where we're just hanging in just above, right? So that's good. This can act as support. And then we've got the bottom of that consolidation down below here to act as support as well. So there are support levels down below us. However, during major macro events like this, they do and very often do and can overwhelm the technicals. So support levels, you see support levels just get crashed through one after the other. And that's why they call it a crash. I'm not saying we're going to have a crash, but there's real potential here. We're in real danger here. I think that the government is coming in and going to support the banking system, going to try to prevent a run on banks, and that will give confidence to the stock market as well. I don't think that the White House, I don't think the Biden administration really cares what the stock market does, but I think they're smart enough to care what happens in the banking system. All right, the Qs. The Qs strangely seem to be hanging in a little better than most of the other indices. You can see we're still only down to the 50% retracement of that last rally up. We did close just below the 200-day moving average and the 50-day moving average, though. We've still got the 100-day moving average below us. But this, and we've actually just filled in this gap here, haven't we? So we can get rid of the shading on that gap because that's been filled. All right, but this 50% retracement, we do expect that to act as support. We've also got that downtrend line that could act as support if we come down further. So there are we've got a number of support levels down below if we come down further. So it's not going to basically it's not going to come right down to those lows from back in October. It's not going to be a one-way trip there, all in one move. I think we've got enough support that we can stop and turn here once all this stuff starts to settle down. IWM obviously was really weak. You may not know, but regional banks, where all this weakness is, are a large portion of IWM. At least 15% of IWM, the Russell 2000 small caps, are small regional banks. So that's why we've seen these big red candles in IWM. Now, it is hopeful that, again, we see that downtrend line that we had managed to get through so nicely and move away from cleanly. That acted as support here, as did this consolidation zone right in here. So let's get a line on that one. Minor support area here off of that consolidation zone. Probably find some support off the bottom of that zone as well. Okay, this is a good place. This is a logical place for this index to bounce. But again, fundamentals are taking over here. News flow is taking over here and will overwhelm technicals. The volatility index. Wow, what a move on that over the 2 days. Giant green candle here. Massive move up on Friday. Thankfully retreated a bit. We would expect this. With all this going on, we expect this big move up in VIX. I'm almost a little surprised it didn't go higher than this. I'm a little surprised it didn't go higher than that on Thursday, and I'm a little surprised. I'm not so surprised it pulled back on Friday, actually, because everything started to make a little more sense. We got a little more certainty into what was going on. However, I think that, again, I'm going to say it again, if we don't see some sort of Fed or Treasury or FDIC intervention into this before Monday, I think we're going to see VIX continue higher as the market continues down. Interesting movement in the yields. Okay, so yields are off a lot because people are buying bonds. It's a bit of a flight to safety, and it's telling us that the bond market thinks that the Fed broke something. Here it is, and let's face it, the Fed did break this. This is partly due to the Fed. It's also partly due to this an irresponsible bank. But it is partly due to the Fed, and the Fed has potentially broken this sort of regional banking system. So the bond market, that's what the bond market is telling us here. They're buying bonds now as a flight to safety, and as saying that, okay, the Fed is going to pivot here sooner rather than later. Rates are not going to go up as high as we thought. They're not going to be able to raise, how do they raise 50 basis points at that meeting that's coming up in a week and a half on March 22nd? How do they go and raise 50 basis points with all this going on? Because a week and a half from now this is probably not entirely resolved. I mean, I think we have a good idea how it's going to be resolved, but there's still going to be a little bit of aftershocks from this, I think, still a week and a half out. And one of those aftershocks is the Fed not being able to raise 50 basis points. Do they even raise 25? I mean, there's still, inflation is still with us. They still need to attack inflation. But can they really raise 50 basis points? I don't know. It's a tough call at this moment. So there you go. That's why bonds have fallen off a cliff like this. Or sorry, not bonds, yields. Bonds have gone the other way, obviously. Bonds have gone up. Okay, let's take a look at the dollar index. Here you go. Same sort of move down in the dollar index that we saw in the bond yields. Now, if things get really seriously bad, I don't think we're going to see the dollar index come down much more, because there is a phenomenon where there is even though this is a problem in the United States and with the United States banking system, there is a phenomenon where people get afraid globally. And when people get afraid globally, the US dollar has always been the currency you go to. The US dollar is a flight to safety kind of currency. So and we saw this happen in 2008. The U.S. markets were completely falling apart, and people were buying U.S. dollars, and the U.S. dollar was going up. So it is a bit of an unusual thing. So that's why I don't think we should expect to see huge move down in U.S. dollar until things start to resolve a little bit. But it's good to see that this is softening up, because that is helping global equities to kind of hang in a little bit, even though they're all coming down a lot too. So we got to go to do our dollar cost averaging system is flashing warning signals, obviously. Here we are in the SPY. Now, we are crossing below those important moving averages, and that's why it has turned red or turned pink, okay? Warning signal. The MACD, the weekly MACD, has not crossed down below the signal line yet. That could happen, within a matter of days. It will happen if the market doesn't bounce here. 1 or 2 more days, and this is going to be down below here. But we're looking at this on a weekly basis, and all it's doing right now is saying, warning, you might want to reconsider dollar cost averaging right now. And I would say, all these macro events are saying, yeah, you should reconsider dollar cost averaging at the moment. However, if there is really strong intervention and we see a strong bounce in the market, then I say go right ahead, continue the dollar cost average here. Now the Qs, again, we've noticed that the Qs are stronger, and these haven't even gone red yet. We haven't crossed below those important moving averages. IWM, on the other hand, has. All right, let's move on to our global equities. This is ACWI, the all-world index, and you can see that this took a big hit on Friday. We're sitting right on that 200-day moving average right now, and coming in very close to that downtrend line. If we look at the all-world, less the U.S., we can see that's not quite as weak. but still weakness here, obviously. EFA, Europe, developed Far East, and Australia looking kind of weak, of course, coming into some decent support, though. Emerging markets, ex-China, right at a support level. You can see that we had good support here before. This is a really important support line. I should probably actually turn this into a major line. Let's see what happens here. If this bounces from here, then yeah, this will turn to a very major support line. If not, we come down, and we've still got some minor support here off of the bottom of this consolidation. So I don't think we go much further to the downside here, unless, you know, the globe turns into a complete disaster. And China large cap, we saw a lot of weakness here over the last week. You know, they've got their own stuff going on over there. But we are now, you know, looking at this trend line. It's kind of supporting, or it is supporting for now. But it kind of looks like it could break down out of here. This needs to bounce up off of this right now. All right, let's look at some commodities. We'll start with gold. All right, so what do people do when they're afraid? They buy gold. And you can see that on the chart. Good bounce here. I talked on Wednesday in the midweek video about you know, potential double bottom here. Well, it absolutely was. Double bottom, and now we've got a higher high. So this bottom is confirmed. I think we can expect to see gold continue to go higher, even if there's government intervention. I think that, you know, there's enough fear in the market right now that this will continue to go higher. We'll get above that 50-day moving average there. The gold miners, on the other hand, do not do well, obviously because they are equities, right? Even though gold is doing well, people just, you know, you want to liquidate some of your equities when you're panicking, even if they're your gold mining stocks. Silver, good action here out of silver as well. It's nice to see it's, you know, putting in a bottoming pattern here, you know, 3 lows here. A little surprised that, and you can see now live, futures markets just opened. Cool. All right, you can see that silver has bounced up nicely. I was going to say a little surprised that it pulled back that much, but now we can see we're right up near the top of Friday's high in silver and moving higher. Let's back up really quick and go to gold. We should see, what do we see here? Okay, not as big a move up, not as big a gap up in gold, but still higher. And we should back up and look at some major indices, because I am seeing major indices up about 0.5%. Here we are right here. This is our current candle, that little tiny doji right there that's now actually turning red because we are pulling back a little bit. But it was nice to see that little gap up. Let's go to an intraday chart on this so you can see. Here, let's go here. Here we go. This is a 5-minute chart of the action we're looking at right now. I'm going to go to 1 minute on this. So this is the S&P 500, the E-mini futures on the S&P 500. You can see here's our opening candle, and you know there's a bit of selling here. Not too surprising on that gap open. However, you know, we are still gapping higher. We're still green on this. So there you go. Ooh, man, they're actually starting to sell this a little much now. Okay, we'll maybe come back and take a look at this before the end of the video. All right, let's move on to, oh yeah, copper. Copper I thought was interesting. Okay, good, that's hanging in. I thought it was interesting that copper wasn't falling apart. Because if you're afraid that the economy is going to completely fall apart, then copper is going to fall apart. Because it is really so tied to the economy. So this is interesting to see it hanging in here. It'd be nice to see that move up though. All right, let's move on to oil. So I see that oil is down just a hair on its opening. But look at oil tightening up in here. And oil actually went up on Friday, which was quite interesting. And it's really starting to tighten up into this pennant formation. We're going to see a big move in oil one way or the other fairly soon, I think. Nat gas. Nat gas is down a little bit on its open. It had rolled over and is coming down. It'd be really interesting to see what happens when we get to this support level, which was the bottom of this consolidation. Really important consolidation. I think now really important support level down here. XLE, the energy ETF, obviously that had a bad day on Thursday, or bad days on Thursday and Friday. What's not good here is to see this close below the 200-day moving average and that important support level. If that doesn't bounce right away and starts moving down into here even further, I think that's really bad news for the whole energy complex. And you can see that that is also playing out in our exploration companies ETF. Again, starting to just, lose support here. And OIH, the one that concerns me most actually is the oil services. Look how much this came down on Thursday. It had already, it had already started to roll over on Monday, when it had that really tight little indecisive day and that doji right there on Monday. And then on Tuesday, it started to sell off, and that just accelerated through the week. Now, the line in the sand on this is this sort of 287.50 level, but not looking good in the whole energy complex, with the exception of oil itself. TAN, that one rolled over as well this week, of course, and being volatile like that ETF does. Let's move into our major sectors. We're just going to see a lot of red candles here. I really don't even know if there's much point going through all of these. We'll just blast through these really quickly. This was consumer discretionary, coming into a support level. Hopefully that holds. XLI industrials, this really surprised me actually, because this is one of our sectors that had really been outperforming, and this really broke down on Thursday and broke through major support level on Friday. We're sitting right on that 100-day moving average. Do we come down into, I guess I need to get a line right there, I think line in the sand on this somewhere around there. So be watching out for that. Financials, obviously we've got a couple of really big red candles on this. And notice how this, really started to break down on Tuesday. It's like somebody knew something. We're looking at financials now. We had a little bit of indecision here on Friday, a little bit of a bounce on Friday, so that's good. That's hopeful. We got to look at KRE. This is the regional bank ETF. And what a disaster here. And again, this gave us clues. This gave us hints up in here when this started to roll over. And I wish I had been paying more attention to this, because there are things on this chart that I would have noticed. And I'm really kind of kicking myself now for not paying more attention to this ETF and not warning you guys about this. Because this gave us a beautiful setup, or anybody who was paying attention. It gave a beautiful setup before it fell apart. Look at that wedge. This is really bearish. So, this is a really nice bear flag here. Rising wedge, you expect to see that breakout to the downside. And, the fact that it formed a bear flag here after some decline, after coming through all of these moving averages, we should have been on watch right here for a move like this. Or, maybe not a move, actually that would be a stretch of the imagination, a move quite like this, but a move down. This would have been playable, this move out of this rising wedge. So you can see, Tuesday, Wednesday, Thursday, the big, gap down and then just flush all day long. And we did get a bit of a bounce on Friday. Now, some of the stocks in there that we should probably look at, FRC is one. There was a lot of questions about whether this is going to be shutting down as well. And we can see that the market is telling us that no, this one is probably going to be okay. But look at this move. On Tuesday at the open, this was at $122. This came down to $45 on Friday before that bounce started. Just brutal. Bank of America, another one that's potentially risky. Hasn't come down as much, but from 34 down to 29, that's a big move, for a big bank. What's another one people are keeping an eye on? Wells Fargo. Big move down in that. You know, some nasty red candles here. So you can see there's a lot going on, but Friday gave us some bounces in some of these banking stocks. So that's kind of telling us that the market is not as afraid of contagion, at least into the big banks, as it was initially. But some of those small regional banks still not looking entirely healthy. This one is STT. You can see that this closed near the lows on Friday. All right, so there you have it. There's your nasty looking banking sector. Let's look at healthcare. This is not looking good either. This definitely went big time risk off on during the week. We had, we'd looked at that breakdown out of the channel. We were quite hopeful when we saw this bounce here. Bounced up, got back inside this channel and just could not hold it. And then, continued to fall all week long. We're out at a support level where it did find support, so this is good. It's technically well behaved. So it's up to the whole market to see what happens next. But this is not an area I'm particularly hopeful in. Although look at this volume. This is the biggest volume you can see on the chart for a while. How far do we have to go back to see volume like that? We've got to go back all the way into May of 2022, last year. To see volume like that. So we're getting very near capitulation here, I think, on this ETF and maybe in the healthcare sector. All right, where to next? XBI Biotech, again, not looking good. We had been looking at a lot of potential breakout plays in biotech recently, and obviously those are all failing. Now, we came down to this pivot level here. And found some support in there, but one little pivot is kind of tough to hold. It's hard to say where this is going next. We do have this consolidation zone here just below where we might see support. So let's see. We could get a half decent bounce out of this if the market decides to recover and recover quickly. All right, XLRE. REITs, they even sold these on Thursday and Friday, and this is defensive stuff. Staples, more defensive stuff. These ones outperformed by going down slower, and potential double bottom here. XLU Utilities sold this as well, but again, didn't sell as much as other things. Outperformed by going down slower. Technology. This one, XLK, doesn't look as bad as you might, as I thought it might look. We have come down to a little bit of a minor support. We've got a 50-day moving average right there. We should expect to see some sort of bounce here. And I'm not saying, when I say some sort of bounce, I don't say, all the way back up and just keep going. It's going to need some help from the market. But, some slowing momentum on this move down, certainly not unexpected. XLC Communications. This one is broken down through that support area, though, and that's a little scary because where do we come down to? I guess there's sort of minor support right here. But not looking good there. And it's not looking good for some of the stocks that are in this that we're going to look at in a sec when we look at our FAANGs. Semiconductors. This has held up pretty well, I think. Did break down out of this channel, so that's not ideal. But it didn't come down as much as other stuff, so that's good. And some of our semiconductor stocks are still looking kind of okay. So on a recovery, if the market recovers, we can probably look to this sector and some of the stocks inside it for outperformance on a recovery. Where to next? Meta. This one really hung in well. Hasn't even broken down through the 10-day moving average. Has rolled over a little bit, but man, it's hanging in. Apple. This moved down a ways, of course. Right at support and right at the 200-day moving average. We really want to see it bounce here. Amazon. Looking kind of ugly, but we've got gap support right here, potential double bottom off that pivot, and more support not too far down below. You know, within $5 we've got a fair bit of support there. So doesn't look good, but it shouldn't break this major support here unless the market is completely crashing. Netflix. Not healthy Netflix. We've been talking about how it hasn't been healthy and which has been kind of surprising. And it is it accelerated to the downside. It broke down through this uptrend line. Not good. Not good at all. A move down to the 200-day moving average here now would not be surprising. The next line in the sand for Meta is off of this pivot at around 275. Sorry, Netflix. I said Meta there. Google. Google not looking great either. As rolled over, was pretty weak the last couple of days, of course. Got some support here. It needs to hold. And a fair bit of support until we get to this major support level at 85. Don't want to see it break below that though. So I think we can see, you know, this is in the communications sector. I think we can see continued weakness out of that. Not somewhere we're going to be looking for strength anytime soon. Microsoft, kind of weak here as well, holding on the 50-day moving average, but it's got to bounce here. And finally, Tesla. Tesla rolled over. Well, Tesla's been rolling over, you know, before all this started, right? So not surprising to see this continue the move down. This candle on Friday is not too bad though, and right off the 50-day moving average, and that support level right there. So I wouldn't be surprised, you know, to see, because Tesla's kind of its own thing, right? It can ignore what's going on in the market and do its own thing. So if there's any sort of positive news out of Tesla, I think this is a reasonable place to expect a bounce. Doesn't mean I'm, you know, wanting to jump in long or anything on that right now, but yeah, I wouldn't be surprised if we didn't see more downside out of this. All right, let's move on to some of the setups and some of the stocks, individual stocks we've been watching. HIMS has, you know, really rolled over here after earnings, unfortunately. Had a couple of bad days, especially on Friday, really weak on Friday. Now we're right into a really important support level here at the $9 level, at this gap, right? We're right at the top of this gap. Do we continue into the gap? If so, I think it's a quick trip down to 850, you know, to fill the gap and this 50-day moving average. If this goes any further than this, though, if we get a close below this 850, 840 area, I think this thing is toast for a while. I think there's going to be more downside, and it can, you know, it can be cutting through these levels. That we've got a level here around 790. We've got another level around 7.25. You know, back into the into where this really broke out and had a nice move. Down here in the you know, 775 to 7.25 area. This has got to get off the mat. This support has to hold. It's getting pretty scary in here for HIMS. There were rumors, and I think one of the reasons this was so weak on Friday is there were rumors that they had a large amount of cash in Silicon Valley Bank, and a really large bond holding in there, 100 million in bonds, I think it was. Those rumors were not true, and the company came out on Friday with a news release stating that the SIVB situation has no material impact on the company. So I think that that's good reason to expect to see a bounce from HIMS on Monday, if that's what this red day was about. And I think it was probably about those rumors, which turned out to be false. All right, let's look at Roblox, because we've been looking at this. We were, you know, expecting a breakout, right, which we tried to do on Thursday, and that obviously failed. So I don't know if anybody went in there, you know, on that breakout early on Thursday morning. or if you were already being cautious enough because of some of the things, some of the warning signals that we were seeing early on Thursday morning. Holy smokes, the Qs just jumped up massively. We're going to go look at these futures in a sec. I've got two more stocks to get through here. I think that this is pretty decent price action here, especially this bounce on the 10-day moving average and the 21-day moving average. I think that this can move back up in here, maybe a couple of sideways days, and then break out again. I think that RBLX needs to still be on watch. The setup's not there right now. It needs a few more days to repair itself, but don't take this off your watch list just yet. Another one that we have been watching, I pointed this out, I think it was it the Wednesday or the weekend video? Anyway, we had been looking at this bull flag here, looking for a breakout. It did break out. We had a nice little move up, and then we had the nasty day on Thursday. And you probably, if you had taken this breakout, probably got stopped out along with me on Thursday. Trailing stop, right? I mean, I stopped out with profit. It's like when everything was going on Thursday and this starts pulling back too, yeah, I'm getting out of that. I'm not going to hang on to a swing trade through what might potentially happen. However, look where we bounced here, right off that declining trend line from the bull flag, put in what is almost a hammer, a dragonfly doji basically, really bullish candle here on this reversal. So I want to play this again. I'm not sure if I want to just buy this at the open on Monday. Looking at the futures right now though, I think I will be buying the gap up in this on Monday. So interesting, definitely worth watching this one. And the final one is TCMD. Same sort of idea here, right? This is just such a beautiful pattern, and it barely broke down out of it, and it reversed instantly. It gave us a hammer. I still want to play this stock. Hopefully the market behaves and I can play this one, because I think that this is going to be a really strong move when this does finally break out for real. So there you go. There's plays that we've looked at before. This is as close as we get to new plays. I don't have any new setups for obvious reasons. I think that if you want to play anything on Monday, play the indices. Be very aggressive and be extremely nimble. If you're playing long side and you see it start to move again, or playing any side, you see it start to move against you with any kind of volume and momentum, just get out, because there will be strong reversals both ways in this market over this coming week. We need to be extremely careful with our trades, even our swing trades. But for Monday especially, I think that you've got to be aggressive and nimble if you play it at all. I think the best thing for most of us to do, especially investors, is just sit on our hands for a couple of days and let this play out. All right, let's back up here to our futures, because they just took a huge jump up, which you can't really tell on this daily chart. Let's go to an intraday chart. Remember, we're looking at a 1 minute chart here, okay? So you can see it opened, pulled back, and something happened right here. Obviously, there was news right here. And I am looking at that news right now. I will read you the headline. U.S. says SVB depositors will have access to all money on Monday. That is big news. That really helps the entire system. All right, so that's something worth looking into a little deeper. Obviously, this news just came out. Oh, I see another one. Federal Reserve Board announces it will make available additional funding to eligible depository institutions. Okay, so the Fed is coming in, and they are backstopping some of these regional banks, is essentially what that's saying. More good news. U.S. Federal Reserve and Treasury are saying we are taking decisive steps to protect the U.S. economy by increasing public trust in our banking system. All right, so this is exactly what we needed to see here. We need to see these guys stepping in aggressively and quickly. So I think, this is way too early to call this, but I think we can be really hopeful that this crisis is being averted right before our eyes. There you go. Obviously, we still need to be really careful here, keep a close eye on these things, but we've got a lot of big green candles in our S&P futures. We've got even bigger green candles in our NASDAQ futures. This is a nice looking move here in the NASDAQ, up 1.5% in those futures. Even the Russell 2000, in fact, the Russell 2000 futures are currently outperforming the other indices, up just over 1.5%. Good stuff here. Really, really happy to see this. I think I can be quite hopeful for tomorrow morning, but I will be watching this closely. That's about all I've got for you for charts for today. Let's go to our calendar for what's coming up. All right, so we'll be doing on Wednesday, we're going to be doing a trader roundtable on Wednesday, where we get a bunch of us together from the Discord in a live session. We just talk about basically whatever we want to talk about with regard to trading. It's really fun, really interesting conversations. Another thing we're doing now on Wednesdays is I'm posting a quick little weekend update video, kind of like weekday, midweek update video, kind of like what we do on the weekends here, but much shorter, faster, quicker look at the markets. And that will come out every Wednesday shortly after the close. I want to thank everybody for coming and watching. If you've made it this far, you guys are the real heroes. Hit that like button, share with your friends, and subscribe. Enjoy the rest of your Sunday, and it looks like we've got a good chance that this is going to be a happy Monday and good week coming up. Thanks, everybody.